ugly word called tariff.
It's Canadians who get to pay for those tariffs.
Could lead to possibly a recession.
That ugly word definitely is getting thrown all around.
Give us your prediction.
Cause increased prices, cause concern of inflation.
Low interest rates, what does that do for the real estate market?
In terms of buying a home, it's probably going to make it easier for you.
Hi folks, welcome to the Mortgage Den for April the 8th. With me today is Brian Greenwood from Northwood Mortgage. Welcome, Brian.
Thanks a lot, Nick. Nice to be here with you today.
Brian, today we're talking about mortgage brokers and tariffs. So let's start about this ugly word called tariff.
Right.
We know tariff is a tax that's paid on goods that are imported, but who pays the tax? Who's then going to end up paying it?
Well, it's interesting, Nick, that ultimately the consumers are paying the taxes and paying the tariffs, which is usually the case with taxes. So if Mr. Trump has decided to impose tariffs on goods coming into the United States, it's his own citizens that would be paying for those taxes and tariffs. And if our government decides in retaliation to, apply tariffs to goods that we import from the U.S., then it's all of us Canadians who get to pay for those tariffs.
Mr. Trump is using these tariffs to sort of protect some of his industries. He wants to redevelop them. He wants the manufacturing to grow again. So he's putting in these higher prices on the goods that are being imported. How does that affect us here in Canada?
Well, if they're goods that our Canadian businesses are in the habit of selling to the U.S., selling to U.S. businesses, if we're suppliers to some of those U.S. businesses with our products, then the things that we're trying to sell all of a sudden became a lot more expensive for our customers. So it becomes harder for us to sell our products to our U.S. customers, whether direct to consumer or whether it's to, an intermediary.
Because this is going to happen, chances are the Americans are going to look elsewhere for, as you said, a cheaper product or try making it themselves, which means some of our businesses may see a slowdown in, orders from the U.S., right? Which could lead to possibly a recession.
Yeah, that ugly word definitely is getting thrown all around a lot now. And yeah, absolutely. If our businesses are going to reduce what they, if it's going to reduce demand in the U.S. for the things that our businesses are trying to sell to them, our businesses may be forced to look elsewhere for different customers or may be forced to cut back. And certainly, if businesses are thinking of cutbacks, they're always thinking about whether they should be reducing staff, and Canadians will start worrying about their jobs. And that's, usually one of the big signs of recessions.
Brian, last time we saw this was probably around COVID, 2020.
Right.
We saw people afraid of their jobs. We saw some layoffs. We were heading into recession. What did the Bank of Canada do?
Well, they started cutting rates really quick.
And really deep.
Yes.
I think the rates went to 0.25% was the Bank of Canada rate.
Right.
Right. Low interest rates, what does that do for the real estate market?
Well, for us mortgage brokers and the realtors and the folks who are thinking about buying homes, lower interest rates means cheaper money, which means, as a home buyer, I can qualify for a larger mortgage. I could spend more on a home, or, if I'm not increasing my purchase price, then it means my mortgage payment will be lower than it would have been with a higher interest rate. So, in terms of buying a home, it's probably going to make it easier for me to buy a home.
Now, if Canada retaliates against the U.S., we start charging tariffs on American goods. How does that affect us?
Well, so if our government retaliates and adds tariffs to goods that we're bringing in from the United States, that's going to make those goods more expensive for us as Canadians when we're purchasing them.
And when things get more expensive, this leads to inflation. What does the Bank of Canada have to do once we have inflation? We just saw it recently.
Right. Well, and so that's, sort of the opposite effect from recessionary pressures. With inflation, the Bank of Canada would tend to raise interest rates and try to slow down the economy.
So now we have a problem. We got potentially a recession, topped with a potential inflationary situation,
right?
Stagflation.
Right.
As of recent, which side do you think the Bank of Canada is going to be on? What do you think they're going to prefer? Help the recession or fight inflation?
Yeah, so, what we saw recently, sort of coming out of COVID, when the government was looking at those situations, they started raising interest rates. The government showed that they were mainly concerned with trying to control inflation, and one of their tools to do that is to raise interest rates. And so, at least in the recent past, as an indicator, that was the choice that they made.
And that certainly affected the real estate market. Certainly slowed things
Absolutely.
down. It has dropped values of homes. Well, people can't borrow against the homes to the levels that they had previously expected. Tariffs, bad word. Look at the stock market for the last 3 or 4 days. A major plunge. How does that affect the real estate market?
Well, yeah, that gets a lot of people worried, seeing the stock market drop so much in such a short period of time. And people start thinking about, if it's parents who might be in position to help their kids buying a home, the parents are starting to think about what's happening to my savings, my investments, my retirement plans when I see the stock market doing this. And when it's the buyers themselves looking at, what's happening with my savings while I'm waiting to buy a home and seeing the stock market's going down. So it's going to make people very concerned and probably slow down the buying activity.
Buying activity slows down. What's the effect on builders? If they start seeing people not able to afford or not able to buy these homes, what's their move?
Yeah, so that's going to have builders worried. They don't want to be sitting on inventory they can't sell. And so builders are going to be reconsidering whether they're ready to start new projects, whether they want to put existing projects on hold or take a pause. So it's going to slow down development in general, and there's going to be fewer new properties available for sale.
All right, Brian, look into your big crystal ball. Right? You've seen what's happened. There's been talk today, April the 8th, that Trump's going to push out tariffs, another 90 days. There's a lot of talk about different countries reaching out to the U.S. to make deals and stuff like that. Give us your prediction.
I guess if any of us had the crystal ball, we'd be using it and we'd be, very happy and able to help a lot of people. So given that none of us do, certainly we take our best estimates. And, prior to these recent activities with Mr. Trump and with tariffs, interest rates have been coming down very quickly for, a good 12, 18 months. And there's certainly been a lot of talk expecting rates to continue to come down, likely through this calendar year, and that has been the talk. And now on top of that, we've got to reconsider, with Mr. Trump and his activity and tariffs and all the things we've just been talking about, is this enough that it's going to, cause increased prices, cause concern of inflation, and therefore give our government and our central bank, cause to decide maybe they need to increase rates now. So as we've been saying, we sort of have a tug of war going in two opposite directions. So what do we think is going to happen? I'd say in the short term, rates are probably going to continue coming down the next number of months, the next several decision points for our central bank. But, we're going to have to see what's happening by summertime. If we're concerned about inflation, is that going to be enough that rates start going up later this year? I don't think I know the answer, but it's a question, to think about.
Well, we're going to have a new prime minister very shortly. Either Mr. Carney's going to get an extended term or someone else is going to come in. Right. There's a lot of talk about helping the real estate market, building homes, both from the PCs and the Liberals. I'm like you. I think short term, we are going to see a drop in interest rates as these tariffs start to take effect. It'll depend on what our dollar does. It'll depend on what the Canadian government does to retaliate against the U.S. Can we make deals with other business partners outside of the U.S.? It'll be interesting, but I think if our dollar continues to fall and we have to levy tariffs against the U.S., we are going to see probably rates spiking, I would say beginning of next year. So I think I see a drop for now, and then we'll see what happens with inflation. Brian, thank you very much for being here today, and look forward to see you in the future.
Yeah, thank you very much, Nick. I really enjoyed being here, and great to have a chance to talk through some really relevant topics with you.